Afternoon, how are we all doing? FOMC day. Exciting. Afternoon, Ian, Christian, JC, Fletch, Martin, Gregors, Julio. How are we doing? Morning, afternoon, whatever it is, wherever you are. Let's start off with news. Not a lot today. So far, anyway. We have PPI this afternoon. Came out as a negative, but not a huge reaction from the US. So US dollar Swiss going nowhere. US dollar yen, little bit of downside. Pound US dollar, little bit of upside. Main mover at the moment is the Canadian dollar, which is rallying like crazy. So big moves on the, well, say big moves. US dollar CAD's moving a lot, but not a lot else really moving. Euro CAD coming down a little bit as well. So no real reaction to the news. So wait for FOMC. See if we get some movement off of that. But so far this week's been a bit of a dud. Nothing much moving. No other news this morning. Interest rates for the UK priced in at quarter point cut at some point next year, which is a little bit vague. But apart from that, there's no other news this morning much. 1% drop in total next year. And that's coming out saying 0.25% interest rate. I was going to say that's the same thing. But yeah, anyway. So we know rates coming down. There's a bit of news on OPEC. Saudi output has gone up, basically. If you look at oil, we've got the barrel count coming out at 330 oil inventories. A little bit of a rally on that, but nothing much. So market's not really going to do much ahead of FOMC. So we'll see what happens at the open. The indices, DAX this morning, I got out. Excuse me. It went nowhere today. We've literally had a move of 1R from the open. We pushed up, had a little bit of a rally up, pulled back down again. I didn't like the look of it because of the recent highs that we rejected at the open. So I got out, sat there for ages, went down, went up, came back, sat down, went up, came down. It's just gone nowhere. So DAX was a mess. So if you did take the ORB today, you went long, but that's it. You are still long and you're just literally there. So it's not gone anywhere. It wasn't worth trading this morning. US indices have had a little bit of a push on the news, but not a lot. So as you can see, there's not a massive amount of movement off the news at all. So I'm going to trade as normal this afternoon and see what happens. But these ranges are super, 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 super tight. So we've moved 54 points or 55 points on the Dow out of 270. So no movement at all. So we might get a bit of movement at the open because there's been no reaction to the news. So we'll see where we go. But market's flat, waiting for FOMC. Nobody wants to do anything when you've got potential interest rate changes coming. But we'll see what happens. Afternoon, everybody else. Mark, Virginia, Brian. New Zealand dollar Swiss ADR. So there's a couple of ADRs. What's the time? 4 minutes to go. We looked at the New Zealand dollar this morning. This wasn't actually 175 ADR. This is more like 125, 100 to 125 ADR. Basically, that was where the first 5-minute candle or first hourly candle closed. But we had this whacking great spike down, which is a broker candle swap. So if you actually measure it from there, it's around about 100 to 125 ADR, which is stalled out at, hasn't gone anywhere. Euro pound has hit ADR. So we've had a bit of a rush on the euro. But again, that spiked up and then gone nowhere. We're stuck. We're not going anywhere until FOMC, really. Euro New Zealand, that's come off of ADR quite nicely today. So that one was a nice reversal. M5. Whoops, wrong one. M5, you had the reversal alert this morning up here. There's your reversal. That was worked out nicely. Pound New Zealand as well, very much the same. Nice reversal. There's your trigger. You got into that one off that big move, but it did continue. And New Zealand dollar CAD. So not too bad on the ADR reversals today. That one's just triggered, actually. You wouldn't have got in on that very nicely. That was the entry there. There's ADR. So you've lost half an ADR getting into the position. Yeah, nothing much to report there. Nothing on the RSI. It's flat. It's all flat. So I'm going to give the open. Bit of movement coming in now just before the open. Look, got 3 minutes to go. 2 minutes to go. So I'm going to give the open half an hour maybe. But there's nothing worth looking at in FX at all, because obviously with the FOMC announcement this evening, anything you look at on any currency is going to potentially be invalid. If anything does change on the US dollar fundamentally this afternoon or this evening, everything is going to move. So I don't think it will. They're not going to change the interest rate. I mean, if they did, they'd be crazy not to give us some kind of heads up. But so that's coming out as a 5.5. It's this, which is the important part, and that. So it's whether we find out what forward guidance is going to be as to when they're going to bring the interest rates down next year. That's what we're missing. And that will either make the market move quick or slow towards that rate decrease. And that's where we'll get the move. So probably somewhere between 7:45 to 8 tonight is where you're going to get that movement. And then we've got GDP for New Zealand. Big sell going in. So we're down at the pre-market lows on the S&P, dropping very hard pre-market. We've had this a couple of times this week where we've suddenly had these big moves go in just before the open. It's rather annoying. Afternoon, IT, Amy. Might struggle to get on these today. Selling off. Look at this. Market's not even open yet. It's already sold off. Something spooked the market. But see if we get trades on. Okay, shorts Dow, shorts S&P. Nothing on the NASDAQ as yet. Oh, volatile open today. A lot of movement. Long on the NASDAQ. That's a nice bit of slippage. Okay, so broken short on the Dow. So let's have a quick look at where we're potentially heading on these. So Dow, obviously, we're still rallying. So this rally is still underway. Yesterday we put another high in, so we had a big high put in there yesterday. We pulled back sharply, rallied into New York. We've gapped up and filled the gap today, and obviously now we're breaking short. So upside today is your pre-market high. Once we're out of that pre-market high, sky's the limit. So there's no real upside to look for on the Dow until we're getting close to it now, aren't we? Still fair distance away. So your upside resistance is still 150 ADR to the upside. So if it does break long, you've got plenty of room. S&P, we got miles to go on the S&P as well. You're looking absolute miles. So there's no upside on the S&P, and the NASDAQ. We're a little closer on the NAS. What that is. But yeah, so we've got plenty of room on the NAS. So upside on all of these today. It can run. We're at not all-time highs, but you know, we're at the highs. Plenty of room to the upside on all of them. Downside, nothing really on the NASDAQ to look at. You've got the previous day's high, which is within ADR. So that will be first stop. Not sure if it would react there. We might do, but yesterday's low is beyond ADR. The S&P, yesterday's low is again beyond ADR. Pretty much the same thing. S&P and the NASDAQ today. NASDAQ's breaking short nicely. And the Dow, pulling back a little bit, but difficult to pick a spot on the Dow. There is a support resistance area there, which is just above that propulsion gap. Other than that, again, same thing. It's Monday's high or yesterday's low, which is beyond ADR. So we'll see if we go anywhere. Slightly worried about the price action today because obviously it's FOMC. So what we could well get is very similar to what we got on the DAX and just go into a rotation day today, which wouldn't be great, but not what you can do. So we'll see where we go. So trying to break short at the moment. NASDAQ's rejecting that high so far. Afternoon, XR. Peter. Got cat in that US spike, waiting for them to come back down. Got caught in the US spike. Wasn't a lot of spike really, but not a lot going on really. As you would expect on FOMC day, it's all about waiting today. Patience. Testing everybody's patience. Brian's done a new meme. Oh, look. Giving presents. They're funny old pint glasses, aren't they? What's that? Oh, look, John's got like a very wide fat pint, a very small glass of wine, and whatever the hell that is. Interest rates what? He looks like the Grinch, doesn't he? Oh dear. We will find out what happens with interest rates this evening. Not a lot, I suspect. Right. Back inside the opening pre-market range on the S&P. NASDAQ's off and running today. Trying to. Dow to the downside. Look at this NASDAQ. We had any stocks this morning. See anything? What's the date? Day 13th. No stocks. Adobe are announcing after market today. Could be buying into Adobe, I guess. This might be estimated earnings increase on Adobe, which is why they're buying the NAS. Can't really think of any reason why the NAS would be rallying and the S&P stuck, but Dow having another crack at going short as well. Not really made it anywhere yet, have we? Apart from the NASDAQ. All night exhausted, Franco? I thought you went to sleep earlier. Been trading a Latin dance. Is that a typo? That is trifle. What? Have you not been on the source already? In that glass. Trifle. Oh, in the glass. Yeah. It's not. It's beer. That's the weirdest thing. AI is very confused. Isn't it? It's not right. Oh my God. Look at the hand as well. He's actually merged with the present. Look. Hands. They are no good at hands, these computers. Or ears, it would seem. Shears ears, look. Oh dear. Love it. Stuck again. Are we ever going to get another runner? That's the question. Nothing is moving, is it, at the moment? It's just painful, this market at the moment. Don't know what I'm expecting it to do. It's the week before Christmas. It's FOMC week. It's interest rate week. I'm not sure why I'm expecting it to actually have any volume, but anyway. The Magnificent Seven are all up on the day. Are they now? No idea who they are. They're cowboys, aren't they? Magnificent Seven. Okay. A little bit of rejection at the highs. Okay, so there's your 10-minute range in. So inside bar basically on the S&P. Well, there's your 5-minute opening range, I should say, not 10 minutes. Well, it's 10 minutes. 10 minutes in, isn't it? So we haven't gone anywhere from the initial open. Pretty much inside bar on the S&P. We are inside bar on the Dow. So no movement off of that initial rally at the open. I get the feeling this NASDAQ is going to drop based on what we're seeing on the S&P and the Dow. So I might get ready to close out the NASDAQ and just run those two short. But I'll give it the benefit of the doubt for the minute. Pound CAD is coming down. The pound is dropping quite hard at the moment. As is the euro. Euro and the pound both coming down. The pound is coming down faster than the euro. A little bit of negativity in the Europe currencies. God, this is awful today. Look at this. NASDAQ completely at odds with the other indices today. Get ready to close the NASDAQ. NASDAQ's not making any progress. The other two indices look like they want to drop. And that'll probably drag that NASDAQ back down again. So I'm just getting ready to get that out of this. If we get that big rush to the downside, but it doesn't seem like it actually can make it at the moment. Not going anywhere, is it? Stuck. Closing the NASDAQ. Seems a lot heavier than long at the moment. So I'm jumping ship on the NAS, take a tiny little loss on that, and run the Dow and the S&P short. See if we can get a rally out the lows. So basically, this news that we've had is negative on the US today, which would indicate the US dollar typically would tend to drop or weaken on that. But obviously with FOMC, doesn't look like we're getting a lot of weakness on the US. So the US is rallying at the minute, meaning the stock indices are more likely to come down if that rally continues. So if that's going to happen and we do break out that lows, we could be starting those corrections that we've been waiting for. The S&P and as I say, everything basically, the S&P, the Dow, everything has been absolutely screaming to the upside for weeks and weeks and weeks. It's all due a correction, and there's a good chance that FOMC will do that because it only takes something slightly bullish from the Fed this evening to stall that rally or drop on the US, and these indices will probably start to unwind for a couple of weeks. We've also got the market wanting to get itself flat before next week. So I get the feeling today might be the day where all this starts to unravel. We've got all these interest rates coming out tomorrow for the Eurozone. But once the FOMC is out the way, I think we could be ready for a little bit of a drop. So as I said this morning, if you're in the live room this morning, every time I get triggered into a long, I'm super cautious, which is why I got out of this one this morning. We got triggered long this morning, and the very next candle we pushed up and we rejected straight away off of the high from Monday. Tuesday, yesterday, we opened above the high and immediately rejected that high over and over again. We tried to rally into it today, rejected it. We had another crack at getting through it, rejected. This feels to me like we are hitting that high and the market is ready to just puke the whole lot because it's been rallying for such a long time. It needs a correction. So every time I get triggered into a long, I'd rather be out and see the thing fly than be on the wrong side of it, because you're going to find it very hard to get out when it does turn. Could be today. If it isn't, fine, but I'd just rather not be long. I'd rather be flat than long at the moment. This feels like it's going to come down. Same as the yen. You know, when we were waiting for that yen move to start, just didn't want to be long on the yen. And then all of a sudden, bang, collapses. You just know it's coming. You just don't know when it's coming. This is a problem. So you just don't want to get the other side of it. Feeling like the Asian session again? Yeah. This is why I was considering taking this week off. It is so frustrating trying to trade with no liquidity. You can't, because all you get is big candles, but you don't go anywhere. Yeah. So you can't, what you end up doing is being in something and then getting out of something with no money, because it just doesn't go anywhere. It will go up and down all day long, but it won't move. It's exactly like trading the Globex session or the Asian session in FX. It's just pointless. But, you know, what can you do? Got to try and make money somehow, but, you know, the market's just not conducive to making money at the moment. It's too difficult. This is the problem. You get out of one, and that's the one that goes, and then you just get hedged on the others. It's just, you know, it's almost like you just don't want to be involved in it at all at the moment. It's just a pig. But these things are sent as try us. Powell and John Wick meme is hilarious. Yeah. Got lots of Powell and John Wick memes now. Got loads of them. Actually, not that many Powell ones. Look at that pint. That's a hell of a pint. I'd not seen a pint glass like that before. And he looks like he's drinking out of a wine gumlet. Dow is back to the open. Just trying possibly to get back into that pre-market range. S&P is just stuck. This feels exactly like the DAX this morning. Just sitting there. And then when you do get some movement, you just don't go anywhere. You know, it's just sitting. All you end up doing is sitting here watching your P&L go slightly positive, slightly negative, slightly positive, slightly negative. Just makes you want to shut it out. The next time it goes slightly positive, just go and do something else. Might go and walk the dog. It's just not going to move, is it? FOMC day. If you can squeeze a couple of hundred out of it, take it. Anybody got any FX pairs they want to look at or anything else? I'm still in my Euro CAD. I've literally been saying the same thing last week. I'm still in this. It still hasn't gone anywhere. Nothing's hit RSI. The only thing that's hit ADR is just about hit ADR, and it's come back down again because nothing's going anywhere. It's all stuck. Everything's stuck. We're stuck. We're just stuck. 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 Wasn't stuck. Stuck now. A little bit of yen strength coming in. Oh, no, it's not. That's Swissy weakness, isn't it? Yeah, we've got a little bit of weakness in the Swissy. Everything's pushing up against the Swiss franc at the moment. Pound's dropping, so that's not going anywhere. It's pointless, isn't it? It's just pointless trying to trade at the moment. Nothing's moving, so we'll wait until FOMC. These ones that I'm in, basically, I'm just going to see if they break short. If I can get to the point where I could pull a couple of $100 out of them, I'll probably just do that today. Same as yesterday. It's just not worth trying to do anything. It's all about the news this week. So the market is not going to go anywhere if there is no news. It's going to wait until the news. All the liquidity is going through the news events this week. It's too much news. You're not going to get anything doing anything else. So it's just a case of waiting for this lot, really. Any positions you're in, wait for the news. Wait for them to get moved. But I hold these short. Yes, 2 hours pretty much achievable on the S&P to the downside. So we got that that high spike there, which is pretty much 2R to the downside. If we can get a rally out to 2R, if we go into rotation, that's probably about the lot. NASDAQ, no idea. DOW, can't even pick a level on it, can you? I would say 1.5R today. So this high we hit, tapped into, yeah, we came back up, played around it. So somewhere in that area is a decent support resistance area. Not say decent, it's all I can see. So I'll take that if we get it 1.5 to the downside, which is basically these lows before the close yesterday. Other than that, there's nothing much else you can read into that apart from ADR and yesterday's low. And if it gets all the way down there, fair play. But I don't think it's going to. Cool. Yeah, stuck again, aren't we? Afternoon, Kennelly. Powell, I've read that already. What about oil? So oil, good one. Your name's Lucas. They make oil. They don't make oil. They're a brand of oil. Saudis make oil. The oil inventories come out at 3:30 this afternoon. So we're looking basically for a bounce. So I went through this morning. So if you weren't here this morning, I did quite an in-depth analysis on oil. But we broke down below last week's low today. Sorry, was it yesterday? Right, on the hourly. Yeah, it was. Well, it was yesterday. We broke down below it yesterday. So we closed below last week's low yesterday, and then we broke down and tested it this morning. So we looked at the levels we're coming up to on the 4-hour. We've got a very obvious support area. So OPEC came out and said they are happy for oil to be traded between $70 to $80 a barrel. So this is where they would like to manipulate, if you like, production outputs to maintain pricing around $70 to $80 a barrel. So we're sitting down around, well, we're sitting at 69.14 at the moment. 67.24 is this multiple support. We've hit this many times before and we've bounced every time. So we know the market isn't happy to trade below 67.24 this year. And we're down at the low of the year. So when you start hitting this sort of area, you're going to be looking for a bounce play. We haven't really had a pullback, a proper pullback on this move yet. All we've had is a drop into an accumulation, into a drop. So I would expect a bounce out of here, whether it gets to this level or whether it decides it wants to come and test 64.5, which is very low. I'd be surprised if we get down to there. It's 175 ADR today. I wouldn't be surprised if the oil inventories drive price back down into this area. However, this could be the start. We've had a reversal alert on the hourly on this already today. There. So nice push down, reversal back up again. We've got this propulsion move out of this multi-day accumulation, which is going to find some sell price action. So it's all about the oil inventories today. If the oil inventories take it south, you've got a beautiful entry long with about 1/2 to 3/4 of an ADR stop loss. So if you look at this level down here, there. So if you get down to there and we start to get that bounce, it's actually more than that, isn't it? That's 75% of ADR. So if you put a 1 ADR stop on it, That's going to take you beyond that level. If you do not get limit orders triggering at that level, you're going to get them at the annual low. So we are going to get a bounce, whether it bounces and drops or not, I don't know, but you're going to get a bounce off of those levels. So it might just go from here and never come down and retest these levels. Yeah, price doesn't always have to hit that low. It can bounce anywhere it wants to, obviously, but you've got a really good level coming up there. And we've got oil inventories as a catalyst this afternoon, 330. However, this is priced in US dollars. The market may not want to move oil until it has confirmation of what FOMC is going to be saying about US dollar pricing, because if the US dollar drops, it's going to drop the price of oil as well. So it's difficult to tell, but you've got a beautiful support resistance technical level. But technicals are always trumped by fundamentals. So, but right now, I wouldn't want to do anything but long the thing at the minute. It's a good spot. Very, very good spot. Oh, just triggered in. Oh, didn't cancel my shorts off. Oh. That's right. I don't really want to be long, so I'm happy to be short, but I'd rather not be short because I've got 2 shorts on already. So I'm triggered in on the NASDAQ as well. Forgot to cancel those pendings off. So yeah, let's wait and see if we do rotation or drop. Needed $4.50 to pass another Apex evaluation today. Good man, got $27.50. Good job. Now you've just got to make money out of it. That's the hard bit. Adjusting another order here. DAX is trying to go short as well, look. So we're back down at the session lows. However, obviously, quite possibly where we're going to start to buy it up from. So we'll see. It certainly feels shorter than long, doesn't it? But we'll wait and see. That's all I've got really today. There's nothing to look at. There's nothing moving. So I'm short here. I will watch this. If it starts to move and I get something back down here, I'll probably close the Dow out, hold one of these maybe. I don't want to hold all of this short. There's no point in having 3 exposures short on, because if it doesn't go short, it's just going to cost me 3 times as much because they're all just going to go into rotation. So if we're going to go into rotation, if we do break short and we get down to something like 1R, I think it's probably just take it today. If you can get it, if you can get anything. I'm just tempted to get out the whole lot now anyway and just take a couple of $100 loss because this isn't going anywhere. And it could turn into a triple hedge, which is going to cost me $1,500, $2,000, which is not as much fun as taking a $200 loss. However, it hasn't shown me any signs that it wants to go long either yet. So all the time it's mucking about, I will wait. But if it starts to show signs of going long, I'll probably get out. But we'll see. Out of euro pound with a little less than 1%. Good job, AZ. Just goes to show, even if it's fundamental shift against you, you manage to get, if you manage it right, you'll be fine. Yeah. There you go. There's your exit. So, approaching a 38 retracement. There is a 38 retracement. That leg. Want to measure it from the top. You're approaching a 38, which will be the 24 moving average. So probably a good time to get out. It's likely to... this euro really hasn't got a lot going for it at the moment. They seem to be probably one of the first to drop interest rates at the moment. So if they drop interest rates, obviously that's going to drop the euro. And there's a good chance that they're going to go before the US dollar this time, which is unusual. So if that happens, it's basically look out below for the euro. So I wouldn't want to be getting in too aggressively long at the minute on the euro. Going for a correction. That's the low of the session on the S&P by 0.1 pipette. A new low. And we'll cheer at once. I'm calling it. Out of the S&P. Stuck in this NASDAQ now. That was a stupid mistake, that was. Dow's starting to drop. So if I can get the Dow down to a decent profit, similar to the NASDAQ, I'll just shut it and be done. It's not, there's no point. It's just not working today, is it? Nothing's happening. Starting to feel like unless there's a black swan type event, there's not much in fundamentals that can ruin your account. It's you that ruins your account. Fundamentals will make things move for a long period of time if you get on the wrong side of them. It's whether or not you scale out and identify that you're wrong. That's what will cost you the money. So every time there's a fundamental shift, you'll find the market will always correct itself. So this is a fundamental shift. At that point, the Australians decided not to increase their interest rates, which was forecast. The Australian dollar collapsed for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks straight down, no way out. You may have got an exit. I think there was a break-even exit there. But when you've been in something for 4 weeks and you get a chance to get out of a break-even, it's hard to get out because your brain is going, you owe me. It doesn't owe you anything. Get out. Take it. Because look what happened after. Yeah. But look what happened. Yeah. So you're always going to get the exit. And this is why they call it a squeeze. Yeah. You're being squeezed hard and you have to survive. So you have to start to scale out of the position. That's 8 weeks solid, 2 months in one direction, solid, straight up or down, is about as bad as it gets before it corrects. This is why we look at these moving averages, the monthly and the quarterly. The market moves and reports on quarterly figures. So you won't find you get a position that lasts anything more than 3 months because they will be out of it before the 3 months is up because they need to take profit and get paid. So you get monthly reporting and quarterly reporting at banks and institutions, pension funds, hedge funds. They all do quarterly reporting. We have quarterly earnings coming out. Yeah, everything moves in 3 month cycles. You won't find you'll get squeezed for more than 3 months. So if you get caught, I was in this long at exactly the wrong time. I got long as the interest rate announcement came out the wrong way and I couldn't get out. I did get out. I got out there. I think I got out there. I can't remember, actually. I've been in a few. But you'll always get an out. There will always be an out. And it's always, always at the point you are about to jump ship. If you get in this and you're stuck and you go, screw this, I'm taking a hit. As soon as you take that hit, within a week, it will be back up and you'll be out. You would have been out because you are being squeezed. And the point you go, I can't take it anymore, is the point the banks go, gotcha. And then they move back, which is why you need to scale in with the right risk because you'll always get an out. There's always an out. The market has to do this. If it doesn't do it, it doesn't make money. It's not optional. It has to move up and down. It has to have market structure movement. That's how they make money. So it's just you've got to survive it. Long game. Oh. I don't know why I'm trying to trade today. It's FOMC day the week before Christmas. What am I thinking? Must be mad. I wish I'd have closed that. I wish I hadn't have put that on. I have to deal with that. Six. I'm going to have to I'm just going to re-hedge this above that propulsion gap. So ever so slightly above where the initial entry was. I've got to hedge it or take a loss on it. I'm just going to hedge it so that I don't have to initially take a loss on it. It may not get there. If it does, I'm going to hedge that. If this gets back up to here, I'm done on that. This isn't going anywhere. It's just not giving any directional clues, is it? So just getting ready to close that out. Just going to take a $500 loss today. That's what you can do today. Not interested in Bitcoin, but it's flying. Is it? Pound odd ADR. Pound getting hammered. Pound's getting hit hard at the moment. Wouldn't exactly call that flying. It hasn't even hit ADR yet. On the 4-hour Aussie New Zealand, what is your EMA setting? That's the monthly and quarterly. So it's the 24 and the 72 on the daily. On the 4-hour, it's the it's just a multiplier of it by 12. So by 12, 6. So that can't select it. Oh, God's sake! Let me hit it. It's 144. Is the 24 on the 4-hour. This is all covered in the bootcamp. And that is the 432, which is the quarterly on the 4-hour. So it's basically, the maths is the daily 72, yeah, times 6, because there's 6 4-hour candles in a day. So you multiply the moving average of the daily by the number of candles, and that gives you an estimation of the moving average. He says, doing the maths in his head, $32. Hedged. Oh, what a cock up today. So just going to lock that in, that loss on the NASDAQ. I think I'm going to call it for the week. Do you know, I'm not going to bother for the rest of this week. There's no point. It's interest rate hell tomorrow, and it's PMIs all day Friday. There's just no point in trading. The year's over, basically. The market's shot. It's not doing anything. You're not going to get any volume, any movement, any momentum. It's just dead. It's just this is the type of market where you will give back literally a month's worth of money if you try and trade it. You're just going to get signals to go long and short every 5 minutes. Just pointless. So I'll see if I can get this short. That's it. If this drops and I can get $500 in this, awesome. Get a break even on the day. Other than that, it looks like it's going to be $500 or $600 loss day. Tom Hurgard talks about 72-week cycle on indices. Yeah, there's lots of theories about stuff. I don't know. I've never looked into. I don't trade that. I mean, I would have to disagree with that 72-week cycle. What the hell has what happened 72 weeks ago got to do with today? Yeah. Go and look at COVID. What happened before COVID and what happened after COVID? Nothing to do with the 72-week cycle. The market was a very different thing when COVID hit. So your 72 weeks, why is the market looking back 72 weeks going, we need to start buying? It's not. The market moves based on what's going on now. Yeah, 72 weeks ago, the interest rate on the US dollar was less than 1%. It's now 5.5%. Yeah, it's not the same. We're in a different world. We've got two world wars going, not world wars. We've got two major conflicts going on. They weren't happening 72 weeks ago. Oil was in a different supply and demand zone 72 weeks ago. It's just not, in my opinion, it's got nothing to do with it. Same as the moving averages, yeah? It's like everybody talks about moving averages and trading moving average crossovers and things. This is an indication of what the market has been doing for the last month and quarter. I can see it's been going up. I don't need the moving averages to tell me that. But if they are going to buy in cycles, we will see the market respecting these moving averages because they are monthly and quarterly. If the market is going to move in monthly and quarterly cycles without correcting itself, these will work. Any moving average you put on the chart is telling you what happened. What was the average price of this instrument 3 months ago? What has that got to do with today? FOMC today, if they came out this afternoon, this evening, and said, we're going to drop interest rates in January. Sorry, I know we said it was November, then we brought it forward to sort of March, April, May time, maybe June, July. We've now decided it's January. This moving average from 3 months ago has got absolutely nothing to do with what that candle is going to do today. Today is today. What happened 72 candles ago, relevant. Or 24 candles, or whatever, however many candles you want to look at, it doesn't matter. A moving average is telling you what the average price has been over a period of time, which has got nothing to do with today's fundamental news event. Now, it's where people constantly, it's the weirdest thing. People constantly say to me about the opening range breakout EA, you need to filter it. You need the moving average filter on it. Why to move? What has the open today got to do with any moving average? If something's been going up for 7 days and it's above any moving average you can pick, what's that got to do with the volume of buy and sell orders that happen at 2:30 today? Nothing. Just because for the last 5 days they've been buying it, does that mean they're going to do it today? If that was the case, it would never come down, would it? It's got nothing to do with it. I can see it's been going up. Candles have been going up. I don't need a moving average to tell me that if the candle's been going up for 5 days, the moving average is below price. Everybody knows that. You don't need to filter anything. What you need to do is get on board with the way that the market decides to go. So it's cycles and stuff, and like there's companies out there that will provide you with data about seasonality trends, all that sort of stuff. Seasonally, 8 times out of the last 10 years in December, we've had a Santa rally. We didn't last year. We haven't this year. So what should I have been doing in December? Doing nothing but buys on everything? Because 8 out of 10 years before it has? Doesn't work, does it? All it's saying is 80% of the time in the last 10 years, it's gone up. What if it goes down for the next 4 years every December? That brings you back to 50-50. We're flipping a coin again, aren't we? Doesn't make any difference, does it? Oh my God, look at this thing. Come on, Dow, make your mind up. One way or the other. First entry on EG was the 22nd of November. Oh. So that was my entry there. Look, so you got in basically where I got in. So if you look at scaling in 3/4 of an ADR apart roughly, which is going to be somewhere in the region of 25. No. Yeah, something like that. So somewhere around about there per entry. So your trades would look something like that. First entry, second, third, fourth, fifth, 6 entries. Your average, if you scaled in with exactly the same lot size on every position, would be there. If you scaled in with a slight multiplier and have done any drawdown control, that's an easy exit, isn't it? Yeah, that's quite a squeeze. It's not, as I was saying the other day, it's not the time necessarily. It's the speed of drop there. We've had a very, very fast, sharp move on the euro on the CPI numbers, which has caused that to come down faster than normal, which means that the bounce will usually be faster than normal as well. 2 ADR days back to back. But glad you're out. Volume drying up, end of year. Yeah, definitely. It's just frustrating. It's, you know, this is just annoying to trade. It's better not to do it because it just winds you up. This sort of price action, it's just annoying. So I'll have a look at tomorrow. I need to look at tomorrow anyway because the interest rates are coming out. We need to look at and sort of do an update on what's going on with them. But I think probably tomorrow might make the last one this year. Thanks for a great first year's education. Blimey. Can't wait for next year. Fingers crossed. See what happens. Next year is going to be as awkward as this year to trade because next year we've got interest rate drop. We've had an 18-month interest rate climb. Now we've got an 18-month interest rate drop ahead of us. So it's going to be as interesting next year as it has been this year, i.e. difficult. Not to be a brown-nosing weirdo, but when I think about it, yours is the single best financial YouTube channel in terms of value. That's because it's free. You can't do better than free, AZ. Financial YouTube. I never thought of myself as a financial YouTube channel. I guess I am. Oh my God. It is paint drying. Right. So I am going to let me just figure out what this is going to be. What have I got hedged? 600. That's 300. Okay. So if the DAX drops, the Dow, sorry, drops to there, I am closing both positions out That is roughly $600. That is hedged in at 550 stroke 600. Not sure why that's fluctuating quite so much. I must have the wrong lot size on. But anyway, yeah, so if I can get out there on that pays for that, and that's done. And then I think I'll call it there, basically. So it's better than free. We make money. Exactly, Julio. That is a good point. But not by following my signals, because I don't give signals. I just show you what I do, and I use what I build. Right, that's all I've got for you today, because there is nothing happening. So there's no point in sitting here going, holy crap, these candles are going up and down and up and down and up and down, because that's basically what they're doing. So yeah, I'll be back tomorrow morning at 7:50. We'll have a look at the Frankfurt session and see if we can get something out of that tomorrow morning. Not holding my breath. But tomorrow we have got overnight Aussie and New Zealand. The Swiss franc is 8:30 tomorrow. So again, the Swiss franc and the euro tend to move together. The Swiss franc has its interest rate, and it's the euro interest rate at 1:15 tomorrow. So I very much doubt we'll get any volume in the DAX tomorrow morning. They're not going to dump any stocks ahead of that, which is half an hour after the open, and that, which is about 3 or 4 hours after the open. So it's very unlikely we're going to get any DAX movement tomorrow. So I'll watch it. Probably be a short stream, and we'll obviously analyze what's happened in FOMC, because this is obviously the key thing today that we're waiting for. So we'll have a look at that tomorrow morning, and then I'll be back tomorrow afternoon, and we'll look at obviously what's going on with that throughout tomorrow, because obviously we've got all these interest rates coming out tomorrow as well. So the likelihood of what we're going to see this week is a crazy Friday if we don't get any movement on any of this, because now the market knows what the dollar is going to be doing, or it will do tomorrow morning. It's going to sit there and go, right, we know what to do with the dollar now. Now let's find out what we need to do with the Swissy, the pound, and the euro. As soon as that euro rate is out and that press conference is over, the market will probably come to life, because they will now have a fundamental bias on all 4 of those currencies, because they will know what the interest rate plans are for the next 3 months. Fingers crossed, hopefully. Depends whether we get the information or not. But so Friday, when these PMI figures come out, you'll probably see a load of ADRs hit. It's the last proper trading day of the month. It's the last proper trading day of the quarter. It's the last proper trading day of the year. So you can expect some pretty heavy movement at some point over the next 48 hours. So if you want to get involved in it, there's a lot of money-making opportunities. There's also going to be a lot of weird, wonderful moves potentially. So just be very, very careful. If you're position trading, you could be in some really easy exits or really big squeezes. So just be a little careful. This still isn't moving, look. It's even contracting into a symmetrical triangle formation, look. It can't get any tighter, can it? Let's face it. This is going to break at some point in a minute. It's got to go somewhere. But anyway, we'll see. So hopefully down. That gets me out with a break even on the day. If it goes up, I'm going to close that, take that as a loss, and relax. Time to crack open the mulled wine, I believe. No, AZ, Greg and Nirav are good as well. Yep, that's true, Peter. Yep. Greg and Nirav. Can't beat Greg and Nirav. And the guy with the mechanical trading system, whatever his name is. A bit of volume came in there. Got excited for a second. Just for a second. Any good prop firm recommendations? No, there's no good prop firm. They're all the same. Pick one at random, doesn't matter. They'll all do you the same, basically, at some point. Don't forget Mamba and Nick Sean, yeah, our other friends. Watch the Steve Ward video, by the way. It was amazing and highly recommended. Yeah, it's a really good interview, that. Steve Ward, he's a very good trading psychologist. He's not he's a performance psychologist, but obviously there's very few people that need that apart from athletes and traders. So that's who he deals with. But yeah, really good. Watch that. Gives you a lot to think about, especially to do with the randomness of these markets and the fact that it's you that causes the money to be made and the markets. There's no system or strategy at play. It's whether that goes up and down and what you do with it. There's nothing you can do to make money out of this market or squeeze money out of it. It gives you what it gives you. It's your brain that makes it go wrong. All systems work and all systems don't. It's very interesting, interesting video. Outro. You've just turned up as I'm leaving because this isn't going anywhere. So nothing's moving. Go and do something else. Do not get involved this afternoon. It's a waste of time. If you do want to get involved, though, hit the short or the long button now with a very small amount of money and then close it about 9 o'clock tonight. You'll either have a very big loss or a very big profit, probably. Other than that, paint drying, much more interesting. I'm still short in the S&P. I got out of the S&P. I got out of this as well, but I forgot to shut the pendings, so I'm hedged. I've screwed it today, basically. Just, I think you do it today. So yeah, I'll be back tomorrow. Anything you need, I'll be in Telegram. Other than that, hopefully you do well on FOMC, and we'll have a look at it and analyze it all tomorrow and see if we can figure out where everything's going to be going in the new year. All right. So have a good day. I'll be back tomorrow morning and tomorrow afternoon as usual. And then, yeah, we'll have a look at everything then. All right. Have a good one. See you next time.